Investment objective of Securities Trust of Scotland is to generate a yield, which we really are trying to grow progressively every year, at least in line with inflation, and to produce strong capital growth. We don't benchmark ourselves against an index because we're producing a yield premium of around about 35 to 40% through the investment cycle. So we're not replicating an index in the short term or on a daily basis, but we really believe over the long term that we're able to produce a strong performance against equities. And we're also charged by the board of the investment trust to beat the median of the peer group. Well, I think in the last year we saw some really fantastic returns for global equities, and that was somewhat anomalous because we saw actually growth starting to fall last year and dissipate. What we're looking for this year really is a pickup in macroeconomic activity, but we really believe we need to see some earnings growth come through to support the valuation in the market today, which we think is quite elevated, particularly in the US. Last year was quite anomalous as well because actually the market re-rated. As earnings growth fell, the market did well, and that was driven by investors wanting to really put a higher valuation on stocks. What we want to see this year is absolutely the earnings growth and the dividend gets back to driving the market return. So we think you're not going to get a sort of 25% return in markets, but maybe somewhere in the region of 5 to 10. Well, I think our approach is really one that is best characterised as really robust and repeatable. We put together a lot of different investment processes to bring together what we call an investment system to make sure that we have a really robust portfolio of stocks that are able to grow through the investment cycle, and that's growing their top line or their revenues, and that will feed through to really strong earnings growth, but then good cash conversion, which will then lead to the business being able to really generate strong dividends and dividend growth in the future. If we go back to how equity returns are made up, it's really all about growth and dividends, and so we think that over the long term that style of equity can really outperform. We do use one or two things that also differentiate us from some of our competitors. We use credit analysis. We stress test our businesses through lots of different scenarios through the business cycle to make sure they can continue to pay the dividend. And we also use some accounting diagnostic tools, but also we use options and of course gearing for the trust, which allows us to manage the income stream and hopefully generate really strong capital returns. So ESG, I think we're hearing a lot about at the moment, aren't we? And most of the trade press we see every day is talking about ESG. We think it's absolutely fundamental, and in fact we've been doing the G in ESG, for a very long time. We like to see it as investment. We're really trying to understand our businesses, how they're managing their businesses on a day-to-day basis, and how they are investing for future growth. And the quality of the management teams is really important. But we are absolutely integrating this into our investment process, our investment system. We want to see that our companies, if they are able to produce a sustainable dividend, very often they are high quality ESG businesses. And we find that those high quality businesses generally produce strong returns on invested capital, and that leads to strong shareholder returns. So we think it's absolutely paramount. It's embedded throughout all of our investment research. It's the analysts that are undertaking this, and we think that it will lead to better outcomes. It allows us to engage with companies as well to make sure that they are doing the right things, that they have the right diversity in their businesses, not just gender, but cognitive diversity, but also they are doing things in a sustainable way. Their practices every day are driving a sustainable footprint, and it's good for the environment, and that will lead to strong shareholder returns. Well, I think the trust has performed exceptionally well over the last year, and I think that's really as a consequence of the hard work that we've put in over the last 3 years, 3 to 4 years since I took over the trust as lead manager in May 16. We absolutely fundamentally believe we can continue to produce really strong returns. The dividend growth in the portfolio that we think is going to be very strong again this year, some in the region of 5 to 10%, and that should underpin that equity market return or portfolio return, which we hope will will beat the market of around about 10%. We're positioned nicely, I think, in terms of we've got a really nice spread of stocks across different sectors. We've got some strong technology stocks that are coming out of a soft patch in activity over the last few years, and we think they're going to do very, very well. But also the valuation of the portfolio is really attractive today as well. It's not expensive, trading at a discount to the wider market. So with all the work that we do, we hope that we can continue to produce really strong total returns.